I know it's to be true that the only answer to a debt-laden, aging population is what I refer to as more cowbell. Stimulus. Stimulus is the status quo. That's why you like Bitcoin, because you can sense that stimulus is the status quo, the debasement of currency. It's the only way.
Hey guys, welcome back to Library of Wealth. Today we have the CEO of Real Vision, Raoul Pal, talking about the unforeseen changes coming to the crypto industry. Pal is expecting a major shift in the coming weeks, surprising many people who are taking short positions in cryptocurrency. This will change the positioning of the markets, which are extremely underweight. The crypto market is currently in a frenzy, with the price of Bitcoin and Ethereum plummeting in the past 24 hours. The total crypto market cap is now sitting at $914 billion, a 10.6% drop just in the last day alone. The dollar is the other crucial variable, as we're now in a pure macro environment. It's not yet clear if the dollar will either move a leg higher or will go through a correction in the next few months. Let's check out this interview with Raoul Pal as he gives his take on the current crypto and stock markets and where we're headed next. Don't forget to like and subscribe if you enjoy the content we do here on this channel. Let's get right into the video.
At some point, if I look at the future and say, I'm going to live in 9 months in the future, is the central bank raising interest rates? There's almost a zero chance. Well, because we've already got to the tipping point where inflation is starting to fall. Just the extrapolation of interest rates mean that they will be below the Fed funds rate by about March or April next year. And what, the Fed going to go to what, 10%? What's left? Rubble. People rioting in the streets, right? You can't do it. You're getting close to the point where the rate of change changes, and in 6 to 9 months' time, the Fed are likely to have stopped and probably cut, because stimulus is the only way the world works.
So they raise rates just to lower them again.
Correct. So they lower the rate of inflation, but then it's like, oh, we need to bring up GDP growth, because if not, we all go bust. Right? And we need asset prices to rise because you can't let the collateral go bust. That's what's just happened in crypto. The collateral, the FTT token, the Luna token, all this stuff went bust. End of game. All the leverage gets blown up. So they can't allow that. So if you borrow money to buy a house and the value of your house goes down 50%, you're insolvent.
Only if I want to sell, though. If I don't need to sell, I'm fine.
Yes. That negative equity means that the banks then become massively proactive in not doing any more lending. That was 2008. The collateral went down. So what else do we borrow against? We borrow against our jobs. You go to the bank or you use a credit card, it's because you've got income, right? You lose that. That's your asset, your income that you generate, right? You can't borrow money. The whole system blows up. You can't pay any of your other debts. In the stock market, in the financial markets, people borrow against bonds and they borrow against stocks and they borrow against all sorts of other elements of wealth. If those things go down too much, then people start asking for their money back because the collateral doesn't cover the loan. And that's the issue the society faces. So it's at every level here. It can't happen. So if your share price goes down too much, you probably can't borrow money if you're a public company because people then worry, can you pay them back? If your income goes down, all of this stuff. So therefore, I think that, as I said, this is how the world works, is stimulus now in this particular phase of the world. And therefore, looking out 9 months, the probability is, knowing what we know about debt and demographics, that the central bank has not only stopped raising rates, but is probably easing rates to try and balance out. As you talked about, this is what you want them to do, right? You want them to try and just stop the worst part of the collapse and the worst part of the boom. The probability is that they will also be trying to inject money into the economy because there's no velocity of money because these old people. So that's quantitative easing. What does that do? Asset prices go up again. So all roads lead to asset prices going up over time. It's a trick because they're devaluing the value of the currency. It's a trick. But then you've taken the bet and I've taken the bet, which is like, we like crypto because we think it not only offsets this whole mechanism because it's a fixed asset, but it also is a technology that we think unlocks a whole bunch of other opportunities and therefore it's valuable. So that becomes a superior bet, and I can't get to a more superior bet, and I've tried, and I've gone through everything. I just wrote a huge, long 60-page article about all of this in Global Macro Investor, and I still can't get to a position where in this construct of the world that Bitcoin, Ethereum just don't become even more and more dominant and valuable. Firstly, the central banks are taking liquidity out of the system and have been for a while. That has hit all assets. And so crypto down 75%, much like many technology stocks around down about the same. So that's been going on. That's been putting the market under pressure. At the same time, when you get to the bottom of the liquidity cycle, if you think about it, if you think there's a bunch of people in the street saying, hey, buddy, can you lend me $1? You've only got $5 and there's 10 people asking. Well, 5 people aren't going to get it. And that's what happens to the bottom of the liquidity cycle. Those who really need money don't get it. And they blow up. So in June, we spoke in the aftermath of that. That was basically the blowing up of the liquidity cycle. Suddenly you find out that all of the people who were running leverage in crypto were getting blown up and they couldn't get any money from borrowers, or they couldn't get any money, from investors. And so that had this huge ramification. So June was actually worse than now because pretty much it triggered everything. So June was the actual damage, right? That was basically the nuke button to say leverage and crypto, as we've always talked about, don't go together, right? So that blew up. Massive balance sheets, 3 Arrows Capital, all of them. But one of them was hidden, and we didn't know, and that was Alameda. We knew they were a massive shop. We knew they were kind of a bit sketchy, but they kind of said it's fine, but they weren't fine. So at that point, they were probably $9 billion in the hole, which is a staggering amount of money. Now, we don't know the exact numbers yet, and we won't do for a long time, but there were a staggering amount of money in the hole. And that was papered over by FTX.
When you say papered over, what does that mean?
They gave them FTT tokens, which is the token that is part of the FTX ecosystem that they control and Alameda control, and then gave them a loan against it. That's what it first appeared, but the plot's thickened a lot since then. But so basically they actually went up under in June. So what we're seeing now is the end of the June thing. And then they gave them cash in exchange for that collateral, but that cash was customer money. Right now, we're in the realms of bad. That's what the story appeared to be. And I have been speaking a few times and said, well, you can kind of understand that if Sam Bankman-Fried is going to lose his entire empire in June, you might be psychologically pushed to do something bad in the hope that maybe you can avert it, right?
This week's crash brings a sudden reversal after weeks of relative stability for Bitcoin and Ethereum prices. Both tokens are now down more than 20% over the last week. Raoul Pal believes that we aren't going to retest lows based on growth, but that we'll have more sideways consolidation. He's noticed that crypto has become overbought, even though people were expecting it to go down a leg lower, very similar to the equity market. He's also seen that certain patents have now been put in, which is only a short-term correction. What do you guys think about Raoul Pal's opinion on the crypto market, as well as the effects of inflation we're seeing now? Let us know in the comments below. Thanks so much for watching. Don't forget to like and subscribe. This is Library of Wealth. We'll see you in the next video.